in 2019, there was the 2.1 months of inventory, and you started to see, like, I had buyers that were in multiple offers, like 2 or 3, and you were like, oh shoot, multiple offers. You heard about it in Toronto and the bigger cities, but it was something that was just coming. But we still had 2.1 months of inventory. And then COVID hit, right? And that's when we really saw the influx of people moving. So it was those people that, are from Toronto or London, looking to retire, didn't need to be there anymore, wanted to be, basically, they wanted to save money, have more money in their RSPs or their accounts, and then travel once COVID was over. So they were coming to Sarnia. They were willing to pay way more money than, locals, as their home was worth so much more in Toronto or London or the suburbs at that time.
Yeah, to them it's almost arbitrage. You can sell their expensive house in like Toronto and come down Sarnia way, which it still is an opportunity comparatively.
It still is, and they're honest about it. They're like, I hate to say it, but I'm getting 1.2 million for my house, so I can pay 600,000, even though it's 50,000 over what it should be. Like, I have no issues. I like this house, and I'm going to get great money for it.
Welcome to the Canadian Real Estate Channel. I'm Andrew Hines, guest hosting the channel for the month, and we have more market updates on the way. But just before we jump into that, if you want to follow me, I'm a real estate investor from Ontario, also investing in Florida, and you can find me on Instagram at the Andrew Hines, or on any of the podcast platforms. You can check out my podcast just by searching my name, Andrew Hines, and that's spelled Hines. So without further ado, let's jump into our market update. Today's the Sarnia market update, and we have Sarah Arseneault. Am I saying that right?
Yep, that's
right.
Good.
All right. Yeah. So she's going to guide us through a presentation. She just showed me a brief overview of it. It looks great. Lots of information in there. Well, about as much as we can get on Sarnia. And Sarah, you're going to tell us all about why.
Hey guys, so you might have seen me before, second video with this channel. I'm Sarah Arseneault. I am a local realtor here in the Sarnia Lambton area. You can find me on Instagram, Facebook, social media as She Will Sell It as my handle. DM me, reach out to me if you have any questions. And I'm super excited to be here with Andrew today to talk about Sarnia. And as he mentioned, I'm going to bring in as many stats as possible. Some of you investors might already know. And some of you are new, even reached out to me since the last video, but there isn't a huge amount of stats. We are a smaller community, and like everywhere, we are low on inventory. So we're going to dive into maybe a little bit of why we're low on inventory, what's happening, and is the market changing? So with some February stats. So let's get going. Perfect. So I am talking about Sarnia Lambton, and we are going to basically be reviewing it with February stats. And then next month, we will look into more of March and the spring market. So just some notable tidbits that I pulled from the stats from last month. The median price, so we're talking about the average, the middle price of home sales in Sarnia alone is up 25%. Or about 110,000 over last year's. So in February, the average sale price was about 550,000. So this is dramatically up. 100,000 is a lot of money. And I mean, I've had some clients, investors and not, since last year, looking and saying prices are too high, like let's wait. And they're still looking, but we're looking, as you see, they could be spending an extra 100,000 this year compared to what it was at last February.
Now, Sarah, these are February stats. Obviously, I guess you don't have the March stats yet, but what are you noticing in March, being that there's a lot that's happened politically, with the conflict and, gas prices and the increase in the interest rate? Are you noticing a change? Because I know other municipalities have noticed a change.
Yeah, like I definitely think it, and as you said, like I'm sure you're seeing in investor groups on Facebook or even just in realtor groups, they're saying like, "Hey, I'm not getting over asking, or I am getting over asking, but it's not on offer day." So the market is shifting. I always say the March numbers are going to be really interesting because even after this February cycle that we got the numbers, the listings really uptook. So I had a listing outside in Petrolia and it was the only thing on the market. We sold it the week after. There was 3 of the exact same race ranch homes in that subdivision, which in prior months was like really unheard of. All of a sudden 3 homes, the same style, 1 week. Now buyers have the chance to look at different homes in that neighborhood and compare them.
Okay.
So this was really new and this is happening more and more. I really think we have kind of stepped into that one spring market. Is it a buyer's market? No, it's still that seller's
Mhm.
market. Multiple offers are still
Yeah.
happening. Inventory is still low.
Well, we're still so low on inventory pretty well everywhere. Most people are talking, a half a month of inventory on the market versus, in a seller's or a buyer's market, you'd be more like 3 months of inventory, something like that.
Yeah. So I mean, I think we're in a tricky spot for realtors only because buyers are like, well, more is coming out, so I'll wait. But
Hmm.
then it's like that doesn't mean you're going to get a cheaper price. I think
Yeah.
one thing we're seeing, especially in Sarnia, is the amount of conditional offers. So there are more conditional offers being accepted. So when I looked up, there was maybe a few new listings the other day, but I saw like 5 orange, on my back end, which means conditional,
Hmm.
which a few months ago that would have been unheard of. It's either cash or not sold. So we're still
Yeah.
getting those multiples, but sometimes now, and what I'm seeing is that the offer is quite a bit higher, but it's conditional. So they're taking that risk to get the more money and accepting the conditional offer.
Interesting. Yeah. I mean, as a seller, that's a tough one to swallow because anything can happen with a conditional offer. You can just and you lose all your momentum if they don't firm up, right?
And I've seen that too. Like the other week, I lost out on one with a client, and we were 30,000 over, but conditional, and they picked the one that was 30,000 less. So there's
Yeah.
still a risk in multiples.
Oh yeah.
It's going to depend on the seller and what their situation is, right? Because we're still
Right.
seeing they're buying before they're selling. So do
Mhm.
they need to sell? Do they have a month? Do they have 3 months? What is the situation they're in?
Yeah.
And are they risk takers? Really, is what it comes down.
Mhm.
So it definitely is changing. And I think we'll see next month. I think anyways, a difference in these numbers and how it's all
Yeah.
shifting.
Mhm.
Um, but I don't know too if it's just the March break effect. Because it
That
seems
could be
like
part
it
of it.
depends
Yeah.
on the house or it depends on the week of what's happening.
Yeah. Well, in other markets, I've seen an increase in the new listings. Like the new listings are up. So yeah, maybe that is the spring market, but again, it'll be interesting to see the Sarnia data when it is available for the month of March.
Yeah, so next month we'll have that and we'll review it and it'll be
Mhm.
interesting. A bigger thing too is even that the condos and townhomes have ballooned almost 400% in the last 5 years. So we're seeing a huge balloon and basically price increase in these townhomes. So that's a huge change, even compared to those detached homes. And I personally think it is investors shifting from those detached homes that
Mhm.
are not attainable anymore and going into the townhomes and condos. Because in Sarnia area right now, anywhere they are getting similar values in rents as the rental market too is so competitive because there's not enough rentals either. There's so many people looking for a place to live.
Mhm.
So that's interesting as well.
Yeah, absolutely. Well, it makes sense, right? Like I always say, water flows to the lowest point, and if people can't make their income stretch for a detached, they're just going to shift to smaller units, and we're going to see more and more of that. Eventually, we're going to see multiple families living in the same house. Like we're going to see all kinds of stuff as these prices keep going out of control.
Which is crazy, and like I don't know, as an investor that's something sometimes you don't want, right, is multiple
No,
families renting from you living
not at
in the
all.
same home. So
And that's
that's
what happened in one of mine. Like the guy moved in on his own, and then he's like, "Yeah, we moved in my brother a lot of help with the rent." I'm like, "Great."
yeah, I was getting applications the other week and it's like, oh yeah, it's like we have 3 streams of income and it's like a brother and a mother and I'm like and their kid and it's like okay, this is a lot going on in this
Yeah,
townhouse, like in a small home.
it's
So
more
sometimes
wear and tear.
Yeah, yeah, no, and that's why I think some people are switching to these smaller homes too, because sometimes it's harder to, pull in all that extended family and friends to get them to live in the home versus these bigger detached homes. So almost in some ways, I believe they're less risk because you only have two bedrooms.
Yeah,
But
you can only live so many people in there. Yeah.
yeah, but you're getting
Yeah.
similar rents. So I think that's
Yeah.
what we're seeing as well. And sometimes these condos too have like grass maintenance and stuff. So for out of town investors, they don't have to deal with that.
Mhm.
So that's something. Active listings, as you mentioned, they were down 13% over last February. So that would make sense for the increase of price as well. I think we have our realtor board president mentioned there was about 3,000 active buyers looking in our area. So when you have 3,000, let's say, active buyers among all the realtors and out of town investors, and then you have 13% less listings, the price, in many ways is bound to increase if people
Right.
want homes.
Supply and demand in action. The market
Correct.
will always find equilibrium.
Correct. So, and I mean, we did see the sale ratio, like we mentioned, and most homes are selling still 117% over their asking. So, as you mentioned too, that's going to be the interesting part of March is what is going to change about that. Because I do think it's going to change a bit, but at the same time, I think our buyers still need to be realistic because some are
Yeah.
now saying like, I'm gonna multiple offers, let's go in under asking.
Yeah, what's more likely is, instead of 117% of ask, maybe it's 105 or maybe it's 100. I mean, time will tell what the market's doing. But
Yeah.
with less people competing on offers, you're going to get less of those 50 to 100,000 over ask, bids because people realize they're not bidding against so many other people. So naturally, I think those numbers come down a bit. Yeah, but
Yeah.
time will tell.
And I think and I'm sure you've seen with other presentations too, but is these agents that are pricing a home maybe a little too far under asking or where the client wants to be and saying, let's generate interest. Then it gets to offer date and they don't get any offers. So now the listing's in this weird point of they're pulling the listing and relisting it at 50,000 more. So
Yeah.
I've seen more of that as well, where realtors have reached out and say, "Hey, I didn't get any offers on offer date. Do you have someone interested?" And I'll be like, "Yeah, let me ask my investor." And then I get a message 10 minutes later, "Yeah, but they actually want 50,000 over asking." And I'm like, "You
Yeah.
literally didn't get it."
That's very common, yeah, in all the other markets, similar trend, a lot of canceled listings, people relisting, and that's a sign, right? That's saying sellers are having to adjust their expectation. The market isn't what they thought it was, so there's obviously been a change, and when that's happening on a micro level, there's gonna be opportunity. There's gonna be, like, little pockets of, this seller really needed to sell, and they're really motivated right now, but the only people that are gonna benefit from that are the ones that are actively looking, analyzing deals, and taking action.
Yeah, and I think a big area of opportunity as well is a lot of people are just scared it's going to go so far over asking that on offer date, everyone, you might have three interested parties, but they all hold back because they don't want to pay over. So a big opportunity too, I feel, is watching those ones. And as the offer date pass, or even that same day, that night, or that morning, jumping in then with an offer. So
Mhm.
getting in, because what we're seeing as well is offer date pass, but then 2 days later, there's multiple offers.
Oh, really? So people are playing games. They don't wanna
So they're
they don't wanna
scared,
offer up
yeah,
yet.
and, like,
Yeah.
it's an emotional game, right? So
Mhm.
as if I had a buyer, I can't say, "Oh, well, go in because, everyone else might be at asking price." You don't know. So that's where we're seeing, 3 days after offer date, the people that didn't even see the home, because let's say it's listed at 400 and their budget is 400, aren't going to see it because 'cause they're assuming it's going over asking price.
Okay.
So it's one where it's a game of is the home it puts a lot of work on realtors because first we have to determine is the home underpriced or is it priced where it should be. If it's priced where it should be, then maybe you still should be taking your client to see it because you don't know if there's going to be offers if people are scared it's going to go over where it should be.
Yeah.
So it's a big mental game. You're right now.
But, yeah, at the end of the day, we know, like, buyer realtors, sellers realtors, they're all looking at past sales. They're looking at the comps. So if you're kinda paying attention to that, you know roughly where something's likely to fall. And then, of course, if the market shifted, if demand softens, then, maybe it goes under eventually. I don't think that that's necessarily something we should be expecting, anywhere in Ontario right now based on how hot things are gonna be, but it very well could happen where things start going under ask again. So, again, very interesting to watch.
Yep, and we'll see. And a lot of sales still, and I'm sure you see as well, you're just still scratching your head wondering how you get that valuation. They're still happening.
Mm. Yeah, it
But
doesn't, I mean, for me as an investor, it's tough to make sense of most of the Canadian markets. Like, of course, there are those pockets like Alberta is still, you can make sense of the numbers, and there's other places that it makes sense. Whereas in Ontario, it's more like you're gonna have to kind of find a way to break even on cash flow. And hopefully over time your rents go up and you start cash flowing more in time. But that's not a place I love to be as an investor. So maybe that's one of the questions I'll ask you is, where's the angle and what can people do?
And let's move on to that. So I will get to that, and that's what and I agree. Like there's been a few deals where clients have wanted to put offers in, and I basically step them back. I'd love to make a sale, but it's like, let's look at these numbers, like where you're wanting to offer. If interest rates change or all this, you're losing money. Like if a
Hmm.
client doesn't pay you, you're losing money. So you're right. You definitely need to come up with alternative ways to make money within the deals, because not everyone's getting those off market deals anymore, or those wholesale. Even some wholesale deals are high, right? Because everyone is looking in all these areas as investors for the best deal possible.
Hmm.
So you were right on here too, like looking at the market activity. This is in the Sarnia area, and new listings. Like this might be different than some of the bigger cities, but as you see, since 2013, like you don't see an even decline in the amount of new listings. So we
Wow.
actually have, like, even looking back at 2018 or 2015, when 2015 we had 145 new listings in the month of February, and now we have 133.
Hmm.
So the amount of new listings isn't very different in Sarnia, but the demand has shifted.
Yeah, just looking at the months of inventory, right? You could have 145 new listings in 2015, but you had 4.5 months of inventory. So there was so much to choose from. So way more supply, I guess, arguably than demand at the time, which probably made that a buyer's market. But yeah, very much not that now with a
Yeah,
half a
and
month of
and
inventory.
even in 2019, I'd say in 2019, there was the 2.1 months of inventory, and you started to see, like, I had buyers that were in multiple offers, like two or three, and you were like, oh shoot, multiple offers. You heard about it in Toronto and the bigger cities, but it was something that was just coming. But we
Hmm.
still had 2.1 months of inventory. And then COVID hit, right? And that's when we really saw the influx of people moving. So it was those people that, are from Toronto or London, looking to retire, didn't need to be there anymore, wanted to be, basically, they wanted to save money, have more money in their RSPs or their accounts, and then travel once COVID was over. So
Hmm.
they were coming to Sarnia. They were willing to pay way more money than, locals, as their home was worth so much more in Toronto or London or the suburbs at that time.
Yeah, to them it's almost arbitrage. You can sell their expensive house in like Toronto and come down Sarnia way, which it still is an opportunity
It still
comparatively.
is, and that's what
Yeah.
we're still seeing.
Yeah.
Sometimes, I have, let's say, a local family bidding on a house in North End Sarnia, and then I have a client, from Toronto, and they're like, and they're honest about it. They're like, I hate to say it, but I'm getting 1.2 million for my house, so I can pay 600,000, even though it's 50,000 over what it should be. Like, I have
Mhm.
no issues. I like this
Yeah.
house, and I'm going to get great money for it. So to me, the valuation doesn't mean as much as someone local maybe selling their home and looking to upgrade.
Absolutely. People with a local market bias, they won't pay those kind of prices. Like if they're already from Sarnia, they're gonna have a lot of trouble paying that. Whereas, like you said, somebody coming in from out of market, they're just looking at it saying, "This is a joke compared to where I come from. I don't even care." They're not
Exactly.
emotional about it like that.
Yeah, exactly. So I think that's also driving up the pricing. I mean, is that good or bad? I think it's neutral. I mean, it is what it is, and Sarnia valuations have been very low for a very long time. Like there was times in the 80s and 90s, where all these bigger cities saw that straight up rise, where we were kind of like hovering on a line for years on end. So there wasn't that
Yeah.
growth that we're seeing now. So that's the biggest things I take from these charts, and that's where, like you mentioned, it will be interesting to see what the March numbers are in terms of the new listings in our area, to see if it's something that has spiked even over the 2020 level of that 143 to last year's. Like, I feel last year this time, where that 154 number comes from is, a lot of people thought it's a great time to sell, right? It's a great time to sell and move back closer to family. Great numbers, and they really didn't see it getting any better as a seller in terms of the amount of money.
Mhm.
um, it did, So we'll see now where people play because, as you know, like the Bank of Canada's interest rate overnight rates have changed. So does that increase these people or these retirees that already have a home or already have a second home? Is that increasing them to sell? Is that scaring them that the interest rates are going to decrease the market?
Yeah, it could happen. I feel like the change was more symbolic than anything. I mean, to think that a quarter point's really going to do much when our inflation is where it is pretty interestingly funny.
Mhm.
And there's only so much they can increase those rates for a number of reasons, or at least you would think there is. But I mean, who knows these days what might happen? So
You never know. I mean, it
yeah.
happened in the 90s, like when
What happened in the 80s really bad, right? My mom and dad came
yeah,
home and they went to the bank for their renewal, and the banker said, "You're in luck, 12.75%." I mean,
yeah, yeah,
you're
and
in
that
luck.
happened here, and a lot of people with these good jobs in the plants,
Yeah.
like making great money, lost their homes because
Yeah.
they had the toys, they were living life great,
Yeah.
and then it happened. So can it? Yes, but I do think we're in a
Yeah.
much more fragile point in terms of, the house to mortgage ratio where
Right. Well,
it would,
and back in the 80s when it happened, prices for houses were like 20, 30, $40,000.
yeah, there are
Now
more
we're talking
in line.
now
Yeah,
we're talking 10 times that and, well, 20 times that in some cases. So,
yeah.
yeah, the interest rate change would be a lot more meaningful.
And I mean, I if that did happen, it could be catastrophic for a lot of people. But in an investor's perspective, in some cases, it's more people looking to rent then as well, right? So
Oh, yeah, yeah, like, that's why, like, you buy for fundamental reasons, right? You buy if you're an investor, you buy with cash flow, and then you don't so much worry about a whole bunch of inventory hitting the market if you know you got cash flow, if you know you're covered. And then as an investor, you have to look at those times as an opportunity. Like, if the market drops 50%, you should be buying. I mean, that's
mhm.
my opinion, that's not advice, but that's my take.
Yeah, yeah, yeah. I mean, it's similar in some ways to the stock market or a style of investing, right?
Buy
They
the
need to
dip.
make sense. You need to know what makes sense to you. You need to know your
Mhm.
market. I've had a lot of that lately too, where investors are just trying to buy in Sarnia, but like sometimes if you don't know the market, you need an expert, right? Like reach out to your realtor, work out a deal with them, even if you're buying privately or off market. Because if you don't know the valuations and you're from Toronto and you're just like, well, this is cheap, like
Yeah.
you don't know the area, you don't know any of that. And that's what's happening more and more too. And people are, trying to save a buck or pass a buck by kind of avoiding the realtor or, like talking to a realtor just to try, but they think it's a good deal, but it's not always when they
Yeah.
come to me after and are just like, I bought this. What do you think the ARV will be? I'm like, you didn't talk to me first? Like, sorry, I can't help you, in some ways. Like, I wish I could help you more, but this was a choice you made.
Yeah.
I went over this when I was talking to Rebecca in kind of my introduction, but this is what I'll probably use moving forward. It's the easiest way to kind of break down Sarnia without getting into niche markets. So I just wanted to kind of go over briefly, like a February summary from 2021 to 2022, the median prices. So the South End, Sarnia, that's kind of where a lot of investors have been looking right now. It's a lower end, it's closer to the industry and businesses. You find a lot of like whether you want to burr, whether you want to buy and hold, like this would be the area where there's a lot of older homes. And because they were lower end homes, a lot of them are in need of repair. These homes that are coming on the market, I've seen a lot of duplexes in this area, especially on wholesale channels, and they need work. So investors are buying them, they're fixing them up, and either one, they're turning them into rentals because there's such a demand, or two, it's like first time buyers that can't get into the market anywhere else. So they're buying here and really improving the community. So this is an area that is improving and is very different from where it was 5, 10 years ago, where South End was like an area that a local would be like, oh, you live in the South End, you don't want to live there, like it's in terms of like comparing it to London or Toronto, it's safe, like totally safe, safer than some good areas in Toronto, but it's an area that kind of had that lower end feel to it at the time. So as you see, like the average price from last year, even there was homes that sold in the 227 range, and now there probably was a few big sales in duplexes as well that influenced that 418. But we're getting up to that 418 point, so an increase in almost 46% in the last year based on the stats. In the central market, so in the middle, so that's where you have a lot of like the malls. There is some higher end neighborhoods in there, but you have the mall, the downtown, and really central Sarnia we saw like a 31% increase. And then Sherwood, which is Sherwood used to be a very big rental market, still is because it's closest to the college. There was a lot of room rentals. People would buy them for that reason. About a 29% increase. And then the north end, that's where, you have your higher end homes closer to the water, Canatera Park, the beach. We saw a more moderate increase of about 23%. So that was always having of high value to be in that end of town.
Yeah, it makes sense that that would be a little bit lower of an increase because a lot of those people would just change expectations and maybe go to a different neighborhood, go to where their money stretches a bit further.
Yeah, and I mean, that's the middle price. So when you're buying in that end, it's definitely closer to the 600 or more, depending the house you're wanting. But it is somewhere where, because it's always in demand, I think these numbers make a lot of sense because it's just basically more of that gradual increase. And a lot of the investors and, that are trying to get that good deal or trying to, even looking at the numbers, a lot of investors, if they want to make money, you don't want to spend over 400,000, or you want to be in that lower bracket as a starter investor. So they're looking more in that south end, which is really, as you compete, drives the price up. Now, things promoting growth, I think this is really important because a lot of investors say, or ask me, what's growing in Sarnia? I get the numbers are growing, but what's driving people here? Where am I going to get my renters from? So these are the things that are promoting growth in Sarnia right now. One of the biggest ones and an opportunity I see for investors is the Nova AST2. So this is a development project for Nova, a world-renowned research plastic making plant. And they have a lot of work going on this year because they are starting the plant up. There's a lot of contractors coming from the east, from the States, the West Coast, and some of them, depending on the trade, need lodging for 6 months up to a year. So furnished rentals are in high demand right now, and the amount you can get, I've seen, even depending on how many contractors can live in it, things like that. But you're seeing from the 3,000 to 5,000 range for a home on a condo, depending what fits for what they're looking for. So as a investor, if you have somewhere or you can buy something that you can turn into that furnished rental, that is a really good opportunity, especially because these people are going to work probably 12 hours a day and they're not going to be hanging out at the house, right? It's something where it's a place to sleep, it's a place to cook, get up and go to work again. So generally you do see good renters that are working at the site as contractors. For this one, because it is a 6 month to a year project, in some cases, they are sometimes bringing their families though as well. So they do need very different style of lodging depending on who's coming. So that's something too, talking to local realtors, Kijiji, things like that, you can find renters for that area. The next one is the Crown Royal Diageo project. So I don't know, have you seen anything about this in the news? This is a pretty huge development.
I heard about it, yeah, but I don't know too much more beyond the headline.
Yeah. So the headline is for everyone if you haven't heard. So Crown Royal and Diageo is not in the area right now. So this is something brand new. They bought 400 hectares or 400 acres in St. Clair area. So this is kind of off of Sarnia, so Corunna, Sombra. I'm not sure the exact location at this time, but they are starting the first carbon neutral plant. So they're investing $245 million into the area. So it will be distribution, warehouse, and one of their main products that they create is that Crown Royal. So pretty cool to come to the area. When the plant and the distribution is up and running, it will employ 80 people. So not a huge amount of employment. But as you know, for any city, it's the buildup, right? Because right now there's no facility at all. So the amount of people it's going to employ, again, those contractors, is going to be substantial. And although we have a massive, labor force, unions locally, there will not be enough people in my mind as they're working on this Nova and as other projects. It will have to be, I would see, as out-of-town workers as well for the build.
Yeah, 100%. You're gonna need to bring in people for that, something that size. It's being in the investor world, it's not necessarily that easy to find good contractors out in Sarnia way either. So, the good ones are very busy. So I could very well see them bringing in a lot of people during this process. Probably a lot of opportunity for short-term rentals again.
Yes, yes. So definitely opportunity. And as they bring them in too, like short term, and that's again probably 6 to 12 months, depending on the trade, because they'll have to stay. Because as you said, like contractors are hard to find anywhere. A lot of the contractors too, sometimes I feel are harder to find in our area because they go and join the union and work in these plant type and these big build settings because they have the benefits. You know, they have the more guaranteed work, they have the higher pay without having to run their own business. So with the amount of need for tradespeople in this area, I feel like that is a huge reason why sometimes people, I've known contractors that ran their own business and they're like, heck, I just got into the union. I think I'll tie up that hat and just, go and build scaffold or, go do something for the union that gives me the same or more income without having to, do all these mini jobs and worry about when my next job is.
For sure.
And deal with people essentially and investors. Not everyone likes to deal with us.
No, I think for tradespeople, and just in my experience coming from a construction background, is they don't like really dealing with end consumers. There are certain outfits that are set up to deal retail with end consumers, or more newer investors, and they build it into their price, the amount of sales they have to do, and then it ends up not being a great deal for a lot of investors. So a lot of the kind of medium contractors, they want to work for the same, you're right, they want to work for the same person over and over again. So I have a lot of people who want to work for me just over and over again because I give them repeat business, in my construction projects. So it's a tricky world out there to get contractors for sure. But I know we're going on a tangent here, but I'll let you get back into it.
Yeah, for sure. And the last one that I've noticed that is in the headlines or in the news is this Origin Materials biochemical. So this is another kind of growth that's been in the works right now, but it is at the Arlancio site based on my research. And they're a company out of California, and they basically use, just in case anyone wants to know, but they use like biomass, so things like sawdust and stuff, and they take it and they turn it into a form of like a building block chemical for things like plastic and building material. So it's some form of cool process, not really my area of expertise, but it is again more growth in the area and kind of more innovation. So that will drive people and new businesses to the area. Now, the big question, and you've kind of hinted on it too, is Sarnia ready for this growth? Is the biggest thing that people ask. So this just came out not too long ago. Sarnia is working on a draft plan right now for growth and seeing, do we need residential? What do we need as we grow, as all this stuff has hit? So the proposed plan is out, but where or how much land we need isn't settled right now. In Sarnia, as you see, the population is about 71,500. In 2021, there was about 100 and let's say 20 new housing built, which is only about 0.16% of the population. So if we compare that with Chatham, or London, which is both about 45 minutes to an hour away, they're seeing, a 0.75 to 0.9% of the population to new housing being built. So we are way, way under what we need to sustain, which, as I mentioned before, is also driving up the prices because we have a lack, right? Like, where are these people going? So that brings us to the draft plan. So Sarnia's draft plan, there's been public open houses on it, and basically a draft official plan will be presented to council on May 9th. There's been a lot of petitions going around that right now because there's arguments of how many hectares do we need? What is our growth for 10 years? As you know, as a developer, are they townhomes? Are they condos? What do we need? The bigger thing that they're looking at is what land and how much. So the public and council and the council's planners they have hired have a very different opinion on how much we need. They have taken a very conservative approach. And I think as investors, as community and people that want to invest in the city, the real estate board is looking for people to basically step up and write. There's an ORIA kind of petition right now and writing to councilors in the city saying, and get your voice heard. So for whoever's watching and does have like a link to the city or wants to, we need more housing, and that needs to be voiced before basically the plan is set in stone and they do it how they want to. I think another big thing too is the Airbnb. So there is also, and this is going through council as well, but they have really just in Sarnia. So the outer communities are still allowed, but there's been a very big, or they're trying to ban Airbnbs. So those very short-term rentals, and that is, in my opinion, very like catastrophic for the area because, as we talked about, the amount of short-term projects. So we have medical field, we have the plants that, sometimes a shutdown in the plants is only a week long. So that's a short-term rentals. So besides going to a hotel, which often doesn't even have a kitchen or things these people want or need, they are trying to ban it to mean that if you live in the home is the only way you can kind of rent out the Airbnb room situation. And even if that happens, you still can only do it for 180 days of the year maximum. So where you have to buy permits, like you have to be associated with the city. So this is being in council and being fought as well, but another area where, investors and people in the community need to share their voice because especially as housing gets more expensive, like it is a way that people can make income. It is being declared, on your taxes, but it's something that the city needs. Or how are we going to get these workers and these people into the community?
Yeah, so many layers to this onion that we could dig into, and
Yes, yes.
for a topic for another day for sure.
Correct. But that's something to just to make investors aware of because oftentimes they're like, well, I'm going to turn this into an Airbnb. It's like, oh, wait.
You might, yeah, you need to have a really strong plan B, right? I
Yeah.
like Airbnb as a plan A, but it only works if you have a plan B because you never know what municipality might come in with some ridiculous, rule like that,
Yeah.
and
Yeah. And that's
and you're
where
at
I
their
think,
mercy.
and that's where I think the furnished rentals are more, with a 6-month contract. Or, I mean, I know you don't have the protection of that short term rental, but it
Yeah.
is still a way with that increased amount. And generally, they are workers that are going home. Like they
Mhm.
aren't just staying and calling it a 6-month situation and not
True.
leaving, especially because it's the increase $3,000 to $5,000. It's a lot more money as well.
Right. Yeah. You almost wouldn't mind if they stuck around.
Yeah, you wouldn't
So,
mind as long as they're paying you, stick
yeah,
around.
exactly.
Yeah,
Yeah,
no
exactly. So,
problem. So those are
yeah.
the biggest things that I see here, and just really speak up if you can. Um, One more thing, this is new, conditional approval. So there was conditional approval. This is more industry. So when they were talking about the draft plan the other day, this is off of Highway 40, which if you look on the map is closest to the industrial. It was farmland. It's going to be basically a industrial park. So if investors are looking to get into commercial as well, this might be an area of opportunity. Reach out to me if you have any questions, but they're sold in 1 acre parcels and it does have conditional approval. So this is something where even if you were to get an accepted contract, it would have a long conditional period at this time because they are waiting on basically the Conservation and Transport Canada because the lots are being sold serviced. So you would need the confirmation of the cost of servicing and the confirmation that that's all going to be happened before closing. So now is the time where you could secure something and have, an estimated, budget price and know where you want your and reserve that spot. And it's looking like at right now, it's probably 6 months down the road before a full approval. So you are looking at a further out, but it is a time where there is still lots available. Most of it is available. So if you are that commercial investor that has an idea or wants to build something, it's something that is getting closer than 2 years ago. It was for sale in 2020. So not much activity happened in terms of the sale of it because there wasn't approvals in place. So as we talked about this whole time and in other markets as well, the pricing is increasing. Numbers don't always make sense in Ontario for rent to ratio of what you have into it. So where do I see the areas of opportunity right now based on what I've seen in the last 2 months? A lot more of my investors are looking at what the house is zoned for. So maybe it's a single family home, but maybe it has that side entrance to the basement or to upstairs and the house is zoned like an R2 or R3. So to have that legal non-conforming unit. So I have a lot of investors that are like, well, if I'm going to pay, 400 or 500,000 for a house, I can't just get the rents based on renting it out as a single family home. So where is that money going to come from? So
Mhm.
looking at more of those R2 or R3 or R4 zoned homes that are currently just a single family home might be an area of opportunity. Multifamily homes, so either like triplex or duplex, that's a huge area as well to look for. You can no longer just, buy that single family home in most cases and make your expenses make sense. So looking at right now, the duplexes that I've seen, if they do need work, are going between that 360 and 450 range for a duplex. So it's still potentially, even for the BRRRR method, if you're buying one that needs a little more work, and you can make the rental values, because rental values are quite strong in Sarnia, so you can make that make sense still. The triplexes right now are going anywhere from 500 to 580, I'm finding. So still, again, areas to make money, and in some cases a bit cheaper than those duplex numbers. And I think we talked about the fully furnished quite a bit already, but huge opportunity if you can make something make sense. And that's why I love a triplex, because let's say, even oftentimes what I'm seeing as well is vacant possession is huge. Investors love it. But there was just a sale where there was two homes that were pretty much identical, two triplexes, both listed at that same price. And the vacant one sold for 80,000 more, just because they didn't want to accept the tenants that had, or in my belief, why didn't you pick the other one that was a nicer home that had the lower rents? So they're paying like $80,000 premiums just to get that vacant home.
That's an opportunity for sure.
Which is a lot of money. Like, you can get renters out eventually, if you need to. But
Pay them to leave.
Yeah, what I'm seeing though is that, like, in this other one, it had a vacant basement. So why not take that, do that into a furnished rental, and get that higher rent price for the 6 months to a year to offset the cost of the upper two that might be paying a few hundred under market price. So working your numbers in a way that is still going to make sense without paying these massive premiums for these vacant homes.
Yeah. Okay. Yeah, that makes a lot of sense. And I was just going to say, in terms of people being prepared for this March, kind of adjustment, there's a little bit of a softening in demand, or it seems like there's a little bit more supply. If you had to break it down to like one or two top things people should be doing to be ready to take advantage of that opportunity, what would it be?
I think, one, they need to be ready. The market's still fast. Like, so I have a lot of investors, Toronto, London, that are like, well, can we do a conditional on me coming down and seeing it? You need to be ready to get up, drive the 2 hours, and come down when you need to before offer date. Because if you're willing, if you want that deal and it's a good deal and you miss out on that due to a condition of seeing it, like, you need to be ready and you need to be hungry. Like, you can't just be like, well, if I win this, I win it with this condition, I'll get down there. Like, you need to have your ducks in a row and know what you want and where you're going to accept it. I think that's the biggest one, because a lot, I can say like, hey, we'll try. But at the end of the day, you need to show you're serious to the seller.
Okay. And Sarah, where do people reach you?
Reach out to me on Instagram, reach out to me on Facebook. She Will Sell It is my handle. That's the easiest way. And then we can start a phone conversation and start looking at what you're looking for, whether it be off-market deals or MLS. I think really know what you're looking for and know your strategy, and let's nail it down before the deals come and go. Because it's too late once they're already conditionally sold and you think, I would have liked that.
Yeah, absolutely. And I imagine once these people start the conversation with you, you'll probably have some homework for them to do to be ready.
Yeah,
And that's
generally,
important, right?
especially when they're like, hey, I don't know about Sarnia. Can I do this or can I do that? Things that are allowed, whether it be Airbnb or what it be, where they're used to investing, and then maybe severing rules, or, there's different bylaws and rules here. So not every market is the same, even though they all seem to be up. So just really
Right.
doing that homework and being ready. Like, it's a two-way street, right? I'm sure you know that with your developing as well. Both parties
Yeah.
have to put the work in.
Yeah, absolutely. You got to do the homework. You got to know your market, right? And then a lot of that is even following the deals that are happening, knowing what stuff is selling for, so that when you see a deal, you know it's a deal, right? And then a lot of that, Sarah, they're going to rely on your expertise, but some people need to confirm it for themselves too. And following what's going on is going to be critical. Making sure
Yeah,
you're ready to move.
agreed. Because
Yeah.
oftentimes, especially newer investors, they're looking to me and saying, what do I pay for this? Like,
Mhm.
they want a number. It's like, well, I don't know. Like, in your head, what is your idea? What are you going to put into it? Are you going
Yeah.
to do it yourself? Are you going to pay a developer to do
Yeah.
it? Like, I
Right.
can't hold your hand the whole way. I can only give you all the facts.
Right. Well, people need to know what numbers they need to get, right? You're buying, you got to have worked out your cash flow. I have a cash flow spreadsheet if people want one on my website, by the way. So andrew-hines.com. You can just click the menu bar and click cash flow. But yeah, run your cash flow, know what your numbers need to look like. And then they can come to you, Sarah, and they can say, well, I know I need, if I'm going to buy at this price point, I need to be able to get this rent. And that starts a conversation at least, right? So you know
Mhm.
where to look and where not to.
That's right.
But you know your cash flow too. So I'm sure that would be no issue there in having that conversation. So thanks so much for all this information. This is obviously a lot of discussion had here. Probably a lot of, well worth people going back and watching it from the beginning for all the information you've given. So thank you for doing this. Thanks to everyone for watching another Canadian real estate market update for Sarnia. And stay tuned for the next update. We'll have that one out for you soon.